everyone, welcome to this edition of Closing Trades right here on ET Now, and a turn for the worse as we step into the extended weekend. Actually, not an extended weekend, but a truncated week, I should say. 24,175 is where we're currently at, and to think of it, we were just closing in on that 24,300 plus level. So from there, it's been quite a bit of fall. Today alone, we've seen a 183-point decline for both the Nifty as well as the Nifty Bank, which is now scaling in at the lowest point in the day. 1.25% is the kind of fall that particular index alone is seeing. Actually, it's not just the benchmarks, but it's also the broader markets which are giving up a lot lesser than the frontline indexes. But they too have turned hands. In fact, as we see right now within the F&O universe itself, it's counter 151 standing to the declines, with just 35 names standing to the advances. What are the key pressure points then? HDFC Bank clearly from the word go today has been weighing heavy on the markets. The MSCI inflows are not as much as the market anticipated. It's going to come in two tranches, but definitely lesser than what the street was penciling in. And that stock is down a good 3%. That itself is weighing quite heavy on both the Nifty as well as the Nifty Bank. ONGC, after a heady run-up, is seeing some profit taking today. It's down about almost 2.5% as we speak. Tata Steel, Bajaj Finance, Tata Motors, Adani Enterprises and Shriram as well are some of the names which are weighing heavy on the markets. Then, of course, there's Aarti Industries as well after that guidance and the commentary from the management. There's Naveen Fluorine, Chambal Fertilizers, Deepak Nitrite. The entire sector of chemicals and fert, there's definitely weighing down heavy. Hindustan Copper continues to react and hold on to its gains after its good set of numbers. That stock still looking good. Marico, Dixon, Oro Pharma still continue to hold out. But yes, I can't even draw any correlation, Nikunj, to global markets because Europe has started off at best flat and Asia has had actually quite a fabulous day, to be precise.
Sasha, frankly, if you just look at today's market action in isolation, you could say it's an ugly one. It's not you moved in line with global markets, but in the overall scheme of things, this just would be considered as a bad day in an otherwise market which has surprised both in terms of resilience and both in terms of comeback from where we were last week versus where we are. So I will not be too perturbed about saying that, okay, it's some kind of an scary, ugly turn, so to speak. I think it's very early to conclusively come up with something, at least based on the evidence. One thing I think is getting more and more endorsed, which is that at higher level supply seems to be emerging. A lot of PSU stocks, which were the original heroes, they are now leading the decline. Banks, I mean, there is a very easy reason to say that why banks are down, but that underperformance is now hurting the market. So we are in that stage of the market where the underperformance in PSUs is getting visible. The underperformance in HDFC Bank is hurting the market, and you are going against the global market. But Kunal, you may go against the global market for a day or two. Ultimately, the global strength is real, and you will go back and align with it again.
Yeah, I think ideally you have to align with the global markets, and I think that's what we've been doing over the last many months, many quarters. That we've been very strong as compared to many of the global markets. But this time around, I think today's selling is more to do with some sort of selling from large cap names. I think HDFC Bank, is one of the major reasons. I think it's contributing some 550 odd points on the Bank Nifty, which is down 700 points. So take away that, and you see the Bank Nifty to be absolutely flat. I think it's just in the last half an hour, last 1 hour, the selling is getting a bit more spread across the mid caps and small caps. So you're seeing many of the stocks making a fresh breakdown. But again, I think we get back to the same point that on the index front, we are still into a range of 500 points. 24,000 still is a major support. 23,900 to be precise is a major support for the index. We tested this level 3 times in the last 5-6 days of this consolidation. And on the upside, we've been unable to break past about 24,500 mark. So I think we need strong evidence from the indices to try and break either of these resistances or supports. That would probably determine the near-term trend for the index.
Okay, that's the trend on the index. Naresh, anything stock specific or a sectoral trend that you're picking up either on the upside or downside?
So what we are seeing is the downtick is across the board. We are not seeing a lot of relative strength anywhere as such. But if you look at the 180-200 pointer decline on the Nifty, 80-90 points is coming from HDFC Bank. So continue to have the same stance that we are in a consolidation mode. We're in 24,000, 23,900 and 24,600, 700. So roughly a 500, 700 pointer range, which should continue. But overall, we are not seeing momentum even on the downside in a lot of cases. It's only result reactions or a con call reaction, but we are not seeing momentum on the downside or on the upside purely on its own. And globally also the markets are in a consolidation mode. So for now, expect the consolidation to continue.
1.5% down for the mid cap index, 1.5% down for the small cap index. Are we at that turn, or is this something which we can safely ignore and move on? What is leading the decline? I think somewhere metals also. So Kunal, now it goes back to global businesses, Tata Motor, Motherson Sumi, metals, all that space is rattling again.
Yeah, they are, and in fact, many of these stocks, for example, the metal stocks have gone through a sharper correction in the last few weeks, and I think the likes of Tata Steel, SAIL, which is trying to show some signs of comeback. I think that's been shown a lot of resistance from the markets, and you see these stocks now breaking below their critical support points. In fact, if I'm not wrong, I think the likes of SAIL, even JSPL, I think they're coming very close to their 200 moving averages, or some of them have actually broken below their long-term moving averages. So that itself is a further sign of potential weakness, which could come back into these names. The only solace which we can see in terms of the sector front is a lot less selling in the auto stocks. So I think when we look at the likes of TVS Motors, Escorts, even Tata Motors to a larger extent, the selling which had happened last week for these stocks, and today what we are seeing as a pattern, many of these stocks are still trading above their last week's swing support by a margin of 5% to 10%. In many of the cases. So I think that generally indicates that maybe the selling intensity is not as high for the auto space, but I think overall, yes, the markets are going through some sort of stock specific selling.
Okay, that's the take coming in on some of those liquid names. In the meantime, let me also welcome on board Pashupati Advani too and figure out what he's making of the market right now. Pashupati, hi, afternoon. Good to have you on the show. And I think time and time again, Pashupati, I mean, be it elections, be it Hindenburg, or for that matter, any other incident, even the global meltdown that we had as recently as last Monday, the kind of appetite that we have from the domestic universe or the domestic fraternity of investors, that clearly seems insatiable because all and every decline and news gets absorbed very, very quickly.
Well, thank God for that. Thank God we have our local investors. Thank God we have our SIPs that, only 3-4 years ago were what, 5,000-6,000 crores a month. Now they're going up to 30,000-35,000 crores a month. So that's actually absorbing the paper that the FPIs are selling. So that's actually good for our markets. But the reality is, I think Nikunj mentioned a little while ago that there are problems outside the US, outside India, and some of the backlash has to come to us because fund flows are what drive us. And I think that's one of the things that we have to be watchful of. I mean, I'm not saying that our market seems to be solid, but there is problems happening in other places. There look like there's going to be war somewhere maybe, and that's not good for markets as a whole globally. So I think that's what we're fighting against.
So what has been your investment strategy? Are you picking your spots in this market, or you are right now refraining from any large investments?
So to be honest, I think it's been a market where if you haven't done anything, you've probably done better, because if you sell something, most of it is up from when you've sold it. My most recent purchases, I have some Tata Consumer, so the rights issue is going on, so I've just subscribed for that. I've subscribed for some extra, so hopefully I'll get some of those. So that's what I've been doing incrementally. But the thing is that one has to, as you said, look for your spots and see what is out there. I was very bullish on infrastructure because the government was spending. So I liked cement stocks. I liked, to some extent, a little bit steel, but the infrastructure pack were also good. So government is definitely spending money on trying to grow the economy. So I think we need to be, in that space to be able to be profitable. The rest of it, I got smacked with the gold prices coming down because of the drop in duty. I've been a gold bug. I've had a decent size of my portfolio in gold and these gold funds. So, fun and games continues, and we just try to stay out of the way. Nikunj?
Okay, now what do we have? Nothing very scary, nothing very decisive. It's a market which is showing signs of fatigue. That is how I look at it. I am just looking at what is happening to Trent. Why? Because this, in a sense, has been one of those intriguing mystery stories in terms of not numbers, but mystery story in terms of 100 plus P multiple and is still holding strong. I'll go to Nuresh to understand that where Trent is headed. Nuresh, it was up I think 10% on Friday or on Monday, but it's just one of those crazy multi-baggers.
So the stock continues to surprise. Every result we see a lot of volatility, but the numbers continue to be good. And that has been the structure for the stock if you look at it for the last almost 1 year. And that move from 2000 to 6000 has been in this manner only. Every quarter results, it continues to surprise. It's just that after such a rally, it's tough to take a call. The fact is, but what we've seen is, say, look at what happened with an Astral Limited or an Aarti Industries. One bad result could also take a big hit downtick going forward. So for now, Trent looks a case wherein nothing can go wrong, and that is where one has to be more careful.
Kunal, PSU stocks are showing signs of dropping. I mean, I'm looking at HAL, I'm looking at BAL, even BHEL. All of them are up 10 to 15% from the recent highs, something we are not realizing it. But 15%, 20% reversals are sharp reversals in any market.
Yeah, they are, and the interesting part is that it's not a very sharp correction for these names. So the rise was very sharp for many of these defense or the PSU stocks. But on the way down, they are going through a gradual correction, which means that the pain is not yet out of many of the stocks. And I think that's what concerns when you look at the short to medium term charts for many of these names, because the volumes have not come out on the much higher side on the way down when these stocks are drifting lower. And on the way down, these stocks are trading below their 50-day moving averages. Some of them are on the verge of breaking below their 200 DMAs. Now, this at a point when these stocks have already gone through a correction of 10%, some of them have corrected by a margin of 20%. I think that generally indicates that a major part of this volume selling is still yet to come for these stocks, which means that there could be a potential one more round of a sharp correction for many of these names. And that's why I think buying at current levels is something which I would not advise. You have to wait out for a point where there is a sharp volume rise, and when you see the prices getting into a more of a sharp kind of a sell-off, I think when you see those kind of opportunities, if it happens 10%, 15% lower from these prices, difficult to anticipate right now, but those are the patterns which probably one should look out for to go for a contra buy or averaging out.
Okay, that's the take on some of the PSUs. We'll discuss those in greater detail, but for now, we're going to take a very quick break.
But it's not like a scary selling, so to speak. Bank Nifty, Sensex, all of them are trading with a downward bias, and it is not something which you can really read too much into. But what has changed completely is Ola, and it has reversed completely from 10-12% higher in the morning when I saw it. They go 129 is almost like 15-16% higher. It has not only shed all the gains, it has come to the lowest point of the day. Pashupati, do you have a view on Ola?
Didn't really look at it, and I'm actually not very excited about the IPO market. That's my personal bias, because I just think that chasing it with small subscriptions is painful, and you're not getting proper allotments, or you're getting too many allotments if you're right. Ola, I believe the allotment was pretty big. I think there was like 1 in 3 or something, so it was good. I'm not sure, but that's what I thought I picked up. So, you've got it now. Whatever you want, you can eat.
Right. Yeah, absolutely. Well, today may be a down day for Ola Electric, but definitely not for the new debutants, be it Brainbees or First Cry, or for that matter, Unicommerce as well. Both of them are sticking by with their listing gains. Brainbees currently holding in over 40%, Unicommerce 94% off a pop. In fact, let's hear out what the managements had to tell us post their listing.
We'll continue to grow organically from here on, unless we get some exciting opportunities from an organic growth standpoint. For last 2 years, we haven't acquired any company for last 24 months, but we continue to evaluate new opportunities. So largely, it will be a function of organic growth as we go along. Really excited. We are focused on creation of value for our young parents as well as for all our shareholders. Now our journey to join hands with public investors has just started from today. So we are very happy, very fortunate that hopefully we'll be able to compound value creation for all our new set of investors from this day on.
By the 15% growth in revenue ahead of the e-commerce market growth, we doubled our PAT. So going forward, our goal will be to continue to deliver e-commerce market plus growth, and obviously a faster growth in profits.
Significant portion of our revenue growth can continue to go to our bottom line, and we have historically demonstrated where our PAT grew almost double from FY23 to FY24. So there is a significant operating leverage in the business, and we have historically demonstrated not only consistent revenue growth but expanding profitability, and this is a business which continues to generate cash on a regular basis as well.
Okay, those of course are the two IPOs which are holding out, or rather the new debutants which are still holding on to their listing gains. Other than that, look out for Hindalco as well, because they reported their numbers. The EBITDA has come in, the aluminum EBITDA that is, has come in at about 3,600 odd crore rupees. That's definitely higher than what the street was penciling in. The copper business EBITDA, that's also come in higher than what the street was estimating. About 805 crore rupees is what they've delivered, and the net profit as well at 1471 is much higher versus the same quarter of last year. But Hindalco is not really seeing much of an excitement. It's falling down with the rest of the market, still lower by about almost 1%. But yes, having said that, they have managed to post an all-time high copper EBITDA, which is up a staggering 52%. That said, a lot of other earnings as well, which have come by since market open. There's been Easy Trip as well, which came out with a decent set of numbers. There's been Fact as well, wherein the numbers have been hugely disappointing. Net loss at about almost 49 crore rupees versus a profit of nearly 72 odd crore rupees. So a lot of earnings there to react to. There's been DCW as well, net profit higher by 30%. So a bunch of these are the ones which, you are seeing the street react to. Rico Auto as well, wherein the net profit has seen a downtick of about 2% That also came out with its numbers. Gujarat Fluoro, the net profit has come in lower by nearly about 47 odd % or so. EBITDA as well has seen a downtick of nearly 25 odd %. So all of these stocks are the ones which are in focus right now and continue to react to their numbers. But Pashupati, as a trend, is there anything that you're liking in the market right now? Because I recall start of the year, the big trend or the big trade, so to speak, was bet on private banks. They haven't gone anywhere. They haven't moved up at all. That's the most obvious sitting duck bottom-up story in the market. But that doesn't, that hasn't seemed to be playing out as per what the market anticipated, especially looking at how some of the private banking names have performed and the concerns around credit growth.
Well, the answer is you'd have been better off keeping money in the private banks in FDs for the 6 months and come back at the same kind of prices, because most of them have not really moved too much. I won't say all, but most of them are where they are. And now, with the MSCI index being tweaked, and I think Bandhan is getting taken out, HDFC's got a lesser weight, which is hurting the stock today since they just mentioned it. And Kotak has been at the same price for a while. So, I mean, I don't know. I'm a little flummoxed. But obviously, there are some systemic issues, probably with the fintech companies and the NBFCs, which is beginning to sort of, like a tide comes in, begin to touch the banks. And they're looking at it. And certainly the RBI is trying to get banks to work with fintechs to have a compliance system that matches banking, so that if there's any problem in the fintech system, it doesn't sort of hurt the banks too much. So I think it's all good things for India's long-term growth. Temporarily, we have to take some pain, but then we've got SIPs coming into all the good spaces. So we're enjoying.
Right, okay. That's the take coming in on what the private banks are up to. Shortly, in about a minute or so, we'll get you a big policy news break, so stay tuned to that. For the index, though, we're now almost headed in for a 200-point decline. Kunal, where is this weakness going to arrest? Any level that you're monitoring?
Yeah, in the first level which we are looking out for on the Nifty is the previous low which was made last week. That's around the 23,900, to be precise, 23,008 92, 93 was the low for the index, which was made on the spot levels. So I think that's the first support level which we'll be looking out for. If the index breaks past above this levels, and say assuming if we have two consecutive days of negative closing below this level of 23,900, then we could probably be at a point where the index could have conclusively indicated a downtrend or a start of a corrective wave for itself. And on the Bank Nifty, the previous support level is where we've tested 49,650 was the previous support for Bank Nifty. So and I think currently it's at 49,850 levels, which means potentially another 0.5% or 1% for either of the indices, if Bank Nifty as well as Nifty. And I think we could probably be at a point where we may try to challenge the first major support for both the indices.
Okay, and here's an ET Now exclusive as promised. We learned from reliable sources that the government is likely to speed up strategic sale of NMDC steel. The government is looking at completing the transaction in the current financial itself. For more on this, let me take it across to my colleague Prakash Priyadarshi. Prakash, what is it that you're picking up on this?
Important development coming in as we are learning from our sources that the government is likely to speed up the disinvestment process of NMDC Steel Limited. We are given to understand that the government is planning to complete the transactions within current financial year. In fact, all the due diligence have been completed and the financial bids would be invited in next 2 months. We are also given to understand that the DIPAM has identified NMDC Steel Limited under a calibrated disinvestment strategy, where department also believes that the NSL is a fit case under new strategy as the plant is new, listing has already been done and it has potential to generate more values for the shareholders. Therefore, the government is planning to speed up the process. Along with that, NMDC Steel Limited has assets worth rupees 37,000 crore and the company has already operationalized 3 million ton per annum capacity of a steel plant at Nagarnar in Chhattisgarh. In addition to that, sources are also informing that the process was delayed due to election in Chhattisgarh, then the parliamentary elections. Now the elections are over, therefore the government is planning to speed up the process.
We'll leave it at that. That's an interesting exclusive that we're currently picking up on NMDC Steel. In the meantime, we'll let Pashupati Advani go. Thanks as always for taking the time out and speaking with us today. But the other interesting chatter in the market is that, the conjecture as to how much celebrities may have gained after the Ola Electric IPO hit the street. I mean, from Farhan Akhtar to Vijay Sharma. Prishti is here to tell us all about that.
Well, certainly, what a stellar debut on the stock exchanges, because it's been just 3 days for Ola Electric and every day we are seeing spectacular moves. For the first 2 days, it was locked in at upper circuit of 20% and even today, it made a 52-week high of around 130 rupees but now seem to be slipping off. And that's Ola Electric for you all, because not just the listing was spectacular, but even the celebrities are seen to be making money out of it, because in this particular company, we have investors like Farhan Akhtar as well as Zoya Akhtar, and not just that, Paytm's Vijay Sharma is also seen to be holding more than 12 lakh shares in Ola Electric. And post the listing, after the listing, we have seen a run up of more than 40%. Then we just tried to highlight that how much of these people are now making in Ola Electric. First of all, Farhan Akhtar's current value of investment in Ola Electric now stands at 4 crore rupees. Other than that, Zoya Akhtar's investment is valued at around 2 crores of rupees. And lastly, Vijay Sharma is holding over 12 lakhs of shares in total, and his stake is being valued at over 13 crore rupees for Ola Electric, when we value that at 109 rupees per share. But the key to note is that when Ola Electric was coming out with the IPO, we were talking about that though the valuations are looking expensive, but there are a lot of growth triggers that the company is working on. And indeed, in the recent while, the near-term triggers that we wish to highlight, a couple of them is yet again, 14th August is the date where the company will report its Q1 numbers, and we will be watching out for that from a loss-making company right now in the bottom line, how much their loss has now shrinked, or rather if there could be a surprise on the profit figure. 15th August is yet another big day for Ola Electric, because they will be launching their first ever electric bike. So all eyes on that. And even today there were a couple of block deals on Ola Electric. So it seems like the interest of these large players is indeed seen in Ola Electric. So that's all about Ola Electric. Definitely great move, but the celebrities are seen to be enjoying the move as well. Back to you.
Oh, yes, they are. Celebrities turning seasoned investors. We'll take a very quick break on that note. Shrishti, thanks for that. Come right back. We'll continue tracking markets on the other side.
Welcome back, and you're watching Closing Trades on ET Now. As of now, Nifty at 24,140 levels, down 0.8% in trade. And in terms of the movers that we're seeing, among the top losers that we have today, we're seeing Aarti Industries, Chambal Fertilizers, DOMS Industries. That's all under pressure, especially on the back of its earnings. But let's dive into some of the stocks that are seeing a lot of move in terms because of the volumes. Ansh is joining in with us to give us those details. Ansh?
Yes. So Balrampur Chini will be the first stock in focus, as the stock has given a good breakout from its 10-session consolidation pattern from around that 495-500 level where it was taking strong resistance, and with this it has also touched 2-year high level, and today's breakout is backed by good volume of over 3 times its average trading volume of last 20 session, indicating good participation in today's breakout. Apart from this, Oberoi Realty will also be in focus, as the stock has given a breakout from its upward sloping channel, and it has also slipped below its 20 DMA and has snapped its 2-session gaining streak. So here we are seeing that there might be a potential reversal in trend on downside. Lastly, Hindustan Copper will be in focus, as the stock has given a breakout from its 6-session consolidation pattern with volume of almost 2 times its average trading of last 10 sessions, and in addition to this, it has also surpassed above its 20 DMA, which gives some good positive mood to the stock. Now, apart from this breakout stocks, there are high chances, very high chances of Aarti Industry getting into ban list for tomorrow. So keep an eye on the stocks.
We'll watch out for those stocks, and also welcome on board Ajay Bagga and figure out what he's making of the market right now. Ajay, hi, afternoon. Good to have you on the show. Just wanted to understand what the strategy is right now. Put fresh, cash to the work right now in this market, or just sit on the sidelines and ride the trend?
I think sitting on sidelines will be better. The positive is, Aisha, the volatility increased only in the equity and the FX market. The rates and the credit markets did not see volatility increase last week. So it wasn't a pervasive panic, even though it looked like that, because the leveraged positions were trying to take out money from wherever they could. So we even saw gold going down because gold positions were booked out and used to settle the leverage. So we had a pretty disorderly yen carry trade unwinding, which led to a risk event and a risk of in the equity and the FX markets. Money went out from emerging market currencies and beneficiaries of the carry trade like the Aussie and the Mexican peso. Those were the currencies that got hit, and equities we have seen across the world. Coming back, it takes a much longer time. There is data which shows that once a US VIX crosses 35, it takes about 170 days on average to come back under 17, 18. So the starting point was about 20, went up to about 38 and a half. Now slowly it's coming back down, but that's a very laborious process. And add on a bit of geopolitical risk, and add on a dash of a slowing American economy. You have the makings of a stalled further rise in the market. So I would say sideways might be a better strategy, or waiting this out might be better. Both shorts and longs will get caught out on a daily basis because the volatility is so high.
Okay, sure. Sideways, just wait out for it to pass by as well, is what you're saying. But Naresh, what I want to talk about is in terms of certain stocks. We have something like an HFCL that's under pressure. We've seen a run, all these chemical names be under pressure. Anything interesting on the charts that one would be looking at for any of these names, or still an avoid coming in there?
So it would still be an avoid, because the rally also in the chemical names was a struggle. It did not see a clean move across the board. We kept on seeing corrections all through. 10% move also in a lot of these names. It wasn't a clean one. And after today's crack, it is across the board. So in this case, a correction of 15-20% from the top would be a minimum expectation. So apart from Aarti, others have not done so. So I would wait it out and not be in a hurry to buy any of the chemical names.
Okay, not in a hurry to buy any of the chemical names. Kunal, let's talk about ONGC, Oil India. Obviously, yesterday, last evening, there were some news flows in terms of, possibility of a withdrawal that one could be watching out for the windfall tax. But ONGC, Oil India, Gujarat Gas, or any of these oil and gas companies have seen a bit of a run-up in the last 1 month. Anything exciting that you would be watching out for there?
Yeah, I think both of these charts are quite okay. I think even after today's downtick for ONGC, or 1.5-2% downtick, I would still believe that it's a very good level to try and look out for maybe adding some few more points for ONGC in terms of a contra buy, because the chart structure for both of these names are very positive. Now look at Oil India today also. I think the stock is up 2.5-3% plus. It's made a fresh high about the 680, 685 plus mark. So I think chart-wise, both of these stocks are looking very positive from a structural point of view. Yes, because of the market volatility, you might see these stocks underperforming for a couple of days. But I believe that the probability of recovery for these stocks is pretty much on the higher side when we look at this as a positional play.
Right. Okay, since it's all about IPOs right now, the street has given a thumbs up to the Kunal Bahal-backed Unicommerce Solutions. In fact, the SaaS player debuted at a good 120% premium today, along with a stellar show from First Cry as well. Sharad is here to tell us more about the same. Sharad, we don't seem to be getting...
Interestingly, the overall listing is coming above the expectations, and the subscription, if you look at it, that's coming at almost 168 times. Roughly 277 crore was raised from the IPO. And if you look at the company itself, the company is promoted by the holding company of Snapdeal and also Rohit Kumar Bansal. Now overall, it's a SaaS platform based company which will be offering software products to help businesses grow. Also, they are into warehouse as well as inventory management system. Interestingly, the annual transaction run rate is also on the higher side as per the industry numbers, and in FY24 also the revenue jump was almost 15% on a year-on-year basis. Interestingly, this is the only profitable company among the top 5 players in the industry during the year fiscal 23.
Okay, surely a bumper listing coming in from Unicommerce and First Cry, but on the listing day, stellar debut from both of them. Listen in to what the managements of the company had to say on the same as well.
We'll continue to grow organically from here on unless we get some exciting opportunities from an organic growth standpoint. For last 2 years, we haven't acquired any company for last 24 months, but we continue to evaluate new opportunities. So largely, it will be a function of organic growth as we go along. Really excited. We are focused on creation of value for our young parents as well as for all our shareholders. Now our journey to join hands with public investors has just started from today. So we are very happy, very fortunate that hopefully we'll be able to compound value creation for all our new set of investors from this day on.
By the 15% growth in revenue ahead of the e-commerce market growth, we doubled our PAT. So going forward, our goal will be to continue to deliver e-commerce market plus growth and obviously a faster growth in profits.
Significant portion of our revenue growth can continue to go to our bottom line, and we have historically demonstrated where our PAT grew almost double from FY23 to FY24. So there is a significant operating leverage in the business, and we have historically demonstrated not only consistent revenue growth but expanding profitability, and this is a business which continues to generate cash on a regular basis as well.
Okay. Kunal, I'm going to come to you. What are your BTST trades for today?
So in terms of BTST, I'll go with one buy and one sell. The first one is about Balrampur Chini. That's a chart which is looking attractive. I'd earlier given targets closer to 485 to 500 for the stock. It's crossed about those levels, so would continue to be bullish on the stock. And now traders could look at a trail stop loss of 500. And for those who are looking at a fresh buy, keep a revised target of 540 for the stock in the near term. On the sell side, IOC is something which is given a breakdown on the short-term charts, breaking below the swing support as well as its 50-day moving average. So would suggest the sell with a target of 160, stop loss at 170.
Right. Naresh, what about your BTST ideas?
So would be a buy on first on Reliance Industries. The stock is holding on to 2900 levels. Stop loss to be kept at 2900, expecting a bounce towards 2970. Second is a buy on IOC. We are seeing a correction across the whole OMC space. Back to the strong support zones of 160, 162 levels. So stop loss at 162, target price of 172.
Ajay, I'm curious to get in your opinion on some of the new paper which has come out. I mean, today, of course, there's been Unicommerce, I beg your pardon, as well as the Brain Bees or First Cry. And then, of course, the recent listing, Ola, and what a stellar debut and performance thereof it's been. Any of these IPOs that you've invested in?
So particular stocks, Aisha, I don't talk about.
Sure. Okay. Any themes that you've liked in the market?
IPOs overall, we've seen a lot of oversubscription, and that's a function of listing gains. So we are probably somewhere in the mid-cycle of IPOs, and we are seeing a very strong listing gains. That's the driver. It's not per se the quality of the company, but a lot of liquidity on the sidelines, which is driving the IPO market, and looks like a bumper year for the primary markets. There is good liquidity in the secondary markets also. But then why are we stalling? We are stalling more because of the global issues. So, primary IPO kind of focuses people's mind on a few days issue, and, a very focused advertisement, focused media presence. And that's what we are seeing. And people have been getting good returns in terms of investing on a leverage basis for a few days and making good returns. That's what's working right now. The fear is especially the SME segment, where any kind of paper is getting very strong oversubscription. When those chickens come home to roost is the problem. But probably in the cycle, we are still mid-cycle. So still some way to go before we get to that froth or euphoria. But the secondary markets on the same end are suffering, A, because FI is taking out money, and second, because of the global macro or the global risk off that's happened.
Kunal, interesting moves that we're seeing, or, a lot of buzz around these smart meter stocks, so Keynes Technology, Genus Power, HPL Electric. Anything interesting that you would look at in terms of this? Keynes obviously has that EMS side also coming into play for it. But anything you would find interesting?
Yeah, I think Keynes itself is a very good chart, because I think after today's up move, the stock confirming a new high, breaking past about 4,700 mark, I think is a classical case of a price volume breakout. But the concern which emerges for many of these stocks is the lack of follow through. Now, there are many stocks over the last many days which have seen 10%, 20% up circuit or closing at the higher point of the day for themselves. But then post that, these stocks have gone through a correction of 4-5%. Some of them have gone through a correction of 1 week or 7-8 trading sessions. So, and the concern over here is the lack of follow through. And given the way the markets are panning out, I think there could be a possibility that the likes of Keynes could probably drift down a bit lower in the next couple of days before it tries to get back into a breakout mode. So I think the best way to try and trade these stocks is to let them first give signs of a breakout and then buy these stocks on a retracement. So after a 10% up move, if these stocks retrace by a margin of 3% to 5%, that becomes a good buying on dips opportunity.
Okay, buy on dips opportunity surely is one we are watching out for. But let's listen into that buzz that is going on around smart meters as well, and what are we expecting. Sharad is joining in with us with all those details.
Well, yes, smart meter themed stocks are in focus, such as Genus Power, HPL Electric, and even Salzer Electronics. These stocks have been buzzing in trade. Now, industry buzz is that larger state government orders is expected to come in over the coming months. And interestingly, yesterday, Andhra Pradesh government launched a prepaid meters coming in the government offices. Apart from the institutional orders, expectations from the state government, the smart meter program is expected to enable almost 1.5 lakh crore investment in the prepaid smart meter segment, and overall the target for 2025 is almost to make the smart meters come in 25 crore homes in order to replace them from the traditional meters. Now, there are two players largely involved, first one being Genus Power and HPL Electric. Over there, their order books ranges between 3,700 crore to 21,500 crore rupees, but the valuations for both the side is on the expensive Apart from this, conglomerates such as Tata Power, Adani Group and GMR also have exposure in the smart meter via their arms or wholly owned subsidiaries. Interestingly, the smart meter, the industry size as per MOCL, it's ranging between 48,000 to 60,000 crore rupees. And as per National Grid mission statement, only 1.3 crore households have actually installed these smart meters, and of course the runway itself is 25 crore, and of course this is coming in for the next 2 years. Also, there are certain risks involved in the smart meter theme, the first one being of course the slower execution for the implementation of these smart meters, also higher charges, as some corners have reported that the charging has gone up, and that is something to watch out for, and of course the elevated valuation which I had actually pointed out. Now today itself we had done our Khabar segment also, where Kayans Technology was in focus, where the Khabar in the street is that their smart meter manufacturing facility in Telangana is expected to start their operation in a month.
Right, okay, that's the take coming in on what the buzz is around the EMS plays. But Ajay, you think, a large part of the rally when it comes to the EMS play is behind us?
No, valuations are quite elevated. That's the risk we are facing. So yes, a couple of years, execution is already in the price, but the scope is huge, Aisha. Just the size of our market and then the size of the global market for the EMS players, if they can offer products for the global markets, that's so huge. So there will be parallel introductions of related products, more lines coming in. But the issue will be execution and at what price. Those are the things we have to improve logistics. We have to improve a lot of other frictional issues in the economy, and we have to go up the value-added chain. What China has done very well right now, it's between us, Vietnam, Mexico, to some extent Indonesia, that these players are going into Malaysia. Again, a smaller market, but in terms of manufacturing, they can compete with us. So the runway is huge. Execution is an issue, and the valuations are already quite elevated. So, as an investor, you will struggle right now. If I could find these cheaper, that would be better. Otherwise, the way is that you go on investing in them regularly. But business models are very good. Business models are good, but valuations are too high right now to justify fresh investment. So better could be regular investing, buy every month a bit and build up a position like that and hope for a correction.
Sure. Ajay, I want to talk about, Hero Moto as well as Apollo Hospitals. Both are set to report their numbers today. Before we go across and listen to what the expectation is, what are you seeing in terms of here for Hero Moto or Apollo Hospitals? Anything interesting that you find?
I would divert that to Naresh because I don't talk particular stocks.
Sure. Naresh, what are you looking at in the two-wheeler space? Hero Moto, or do you think that's something you would look at?
So Hero MotoCorp is making a consolidation after that huge rally. So given that the rest of the auto names have not seen strong price action, would wait out for the numbers rather than take a preemptive move here. Same on the other hand, Apollo Hospitals is interesting for the case that the previous all-time highs are around 6,800. If that crosses post numbers, that would be a strong breakout. So Apollo looks relatively a better chart compared to Hero Moto.
But Ajay, I mean, not Apollo Hospitals for sure. We were talking about its earnings. But within the entire healthcare, and I'm going to throw in the diagnostic space as well here, do you still think there's value on the table? Because, a lot of these stocks have already run up a whole lot.
Again, valuation is the issue, but within that, I think hospitals, you have a huge growth path. So, and these well-run hospitals with excellent management, there is going to be both, a lot of the domestic population getting unlocked and being able to afford coming to these hospitals thanks to health insurance, both from the government side as well as private health insurance catching up, and then medical tourism. The entire Middle East belt and a lot of Europe also, a very standard procedure in the UK means waits of 250 days, 300 days now. And I think a lot of that medical tourism can come to us if we can build a proper pipeline and be able to market. And the domestic market itself is so huge. The saturation or the penetration of medical care is so low. And as health insurance makes the affordability factor go away, these companies will do very well. So hospitals, I would say, are a big play on the India theme, and they'll do very well. Most of them are extremely well run, good managements, able to generate a good ROE on the investments.
Ajay, so good to have you on the show. Thank you, as always, for taking the time out and joining in today. We're pretty much closing in at the lowest point in the day. 200 point of a knockoff is what you've seen on the index alone. The broader markets have also been weak, but weaker when it came to the Nifty Bank as well as the benchmark indexes. In fact, I'm going to quickly toss it across to Snehi as well and get a summary of how the trading action has been today. We will do that. For the Nifty Bank, of course, the big drag today has been HDFC Bank. Disappointment with regards to the inflows post the MSCI inclusion. Then, of course, there's been an SBI, Tata Steel, ONGC as well paused a little bit today, was down about 2%. Tata Motors, Bajaj Finance, these have been some of the other big drags in trade. But Snehi, what else have you been spotting?
Well, absolutely. Let's take a look at how the markets have closed today. And well, at the lowest point of the trading session, like Aisha mentioned, 0.8% cut coming in on Nifty. Sensex too, in tandem with Nifty, almost a 0.9% cut coming over there as well. Broader markets also were falling today. You had the mid cap also falling in tandem with the Nifty, but the real loser here was the Nifty small cap index, more than a 1% cut coming in on Nifty small cap. Let's quickly take a look at what the sectors were doing, and all the sectors have closed the day in the red, with Nifty PSU Bank, Metal Bank, Nifty Auto, Realty being your top losers for the day. Let's talk about some big buzzers in today's session. First up, on the back of earnings, we had numbers coming in from a whole host of companies today. Hindalco, slight miss on the revenue front, but otherwise an inline set of numbers coming in. Hindalco 1.5% lower almost. You had IRCTC, the PAT was up 32.5% year on year. A decent set of numbers coming in from IRCTC this time, but the stock has ended with a minute cut. SAMIL also numbers came out today. You had Easy Trip Planner, the PAT was up 25% on a year on year basis. 3% cut coming in for SAMIL. Easy Trip, however, managing to buck the trend. 1.5% higher is where Easy Trip has closed. Gujarat Fluoro revenue was almost up 4% sequentially as well. Dilip Bilcon also, PAT was up 13.6%. So let's just see how those stocks have done in today's trade. Both of them ending the day in the red as well. Now, the big loser of today was Aarti Industries. Of course, the management withdrew their EBITDA guidance, and big cuts came in for Aarti Industries all throughout the day. 15.5% lower is where that stock has ended for the day. Senco Gold, however, on the flip side, strong set of Q1 numbers came in from the company, so that stock held up pretty well. Almost 4.5% higher is where Senco Gold is. You had brokerage notes coming in today. Honasa Consumer was the one on brokerage's radar today. Goldman Sachs initiated a buy with a target price of 570, so that stock did pretty well, 3% higher. You also had Signature Global, that was on brokerage's radar today. Motilal Oswal initiated a buy rating on that stock, target of 2,000 rupees. That stock also ending the day with a 2% gain coming in. However, weak set of numbers came in for RCF, and that was a stock that did not do well at all in today's trading session. But let's also take a look at some of the other big buzzers today. You had Triveni Turbine, Keynes, Electra Green Tech, Blue Star, Triveni Engineering, ICICI Securities. All of these stocks have ended the day with stellar gains anywhere between 4 and 12%. On the flip side, big losers for today's trading session, Aarti Industries, like I mentioned. DOMS Industries, earnings came out today. That stock has ended the day almost with an 8% cut coming in. You have Chambal Fertilizers, Deepak Fertilizers, Hindustan Zinc, as well as Zydus Lifestyle. Big cuts coming in anywhere between 5.5% and 8% on all of these indices as well. But well, yes, that sums up the day for us. Nifty ending the day at the lowest point of the trading session, 0.8% lower at 24,140 is where Nifty has ended the day.